The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 15th Turnaround Thursday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com, inside the Tiger's Den. A ping will do. So let's go ahead and get this show started on, of course, terrific Thursday. And this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 121 points, about 0.6%, trading down at 19,913. S&P up about 0.6% as well, up 15 points. NDX up 30 points. The Nasdaq Composite up 37. Russell 2000 up nearly 1 full percentage point, so leading the charge to the upside. Of course, the semiconductors really leading the charge up 2%. Up 17 points right now. So market looks strong, long and strong, as the Santa Claus rally continues to head to the North Pole. That means the highs that we have recently seen, those are going to be taken out. It's a beautiful thing. Leading the chart here, the upside. Individually, stock-wise, you've got Athena Health up $21, 22%. Williams Clayton Energy up nearly 10%, nearly $10. SVB Financial up $7 and change. InterDigital up $7 out here. To the downside, Priceline, PCLN up $11, less than 0.75% to the downside. PVH Corp, that's down 5.75%. Ralph Lauren is off 5%, about $5 as well. So we've got things to look at, but I want to hear from you. I want to know what it is that you would like to look at. I'm just going to wait until I hear from you. Okay, somebody said, what's going on with bonds? All right, well, that's the first chart up on our screen out here. So that was a good question. 30-year Treasury has made a bottom. Has made a bottom. How do we know that? Well, here's what we have going on. If I were going to teach you how to trade a hammer, we would wait till days 3 through 8 or bars 3 through 8 to go ahead and make that decision. Well, there's a hammer candle that formed on December the 12th, 4 bars ago. This morning, what we saw was a test of that hammer low out here. That hammer low has held. If you were looking for a low-risk trade, that was it. Now, that doesn't mean it's going to work, but if you were looking for a hammer candle to tell you that a market was hammering out a bottom, well, that occurred out here on the trading session of December 12th. Then if you're going to say, I'm going to take the conservative approach with regard to hammer candles, and I want to wait days 3 through 8, or really sessions 3 through 8, and wait and see if the wick gets tested 50%. You'd say anywhere between 50% of that wick and the very bottom of that candle as your entry price. Well, that's what we have out here. So you've got a signal in the 30-year Treasury. Doesn't matter what's going on interest rate-wise and so forth. The way that this market, that's the program. That is how you would trade a hammer candle. So voila, boom, there you go. The bonds, the 30-year Treasury has made a bottom. Now, is it like a bottom, like forever bottom? No. But it is a buyable bottom in the treasury market out there. So if you're in a TBT and you've been playing it to the short side, depends on what your outlook is. If that's in your long-term portfolio, then that makes a lot of sense to me because rates over time are going to continue to go up. But if it's a trade, you might want to consider tightening that stop out there. Now, the big question, you've got gold getting smoked to the downside, off $33, trading out at 1130. Miners getting smoked. When I say getting smoked, I don't know what I mean by that, but let's go take a look at it. Let's take a look at the GDX. Looks like that actually is a potential hammer candle today, but you and I know that you've got a gap to the downside. So in one sense, it's hard to call it a hammer because really it is a gap to the downside. Now, you had volume coming into the GDX yesterday. Really all towards the end. It doesn't matter when, at the end of the day, it doesn't matter when it came in, but the volume it was going against was November 23rd. 134 million shares out there, even though that was close to Thanksgiving. Still, that was good volume to the downside. And yesterday took it out with 154 million shares. Today, you've got 72 million shares out there. Nonetheless, and we don't have the same signal that the miners have formed a bottom, but what we do have are signals all over the place. Not really all over the place. Let's go take a look at them. How about in two of the most important? Two out of three. You got 2 out of 3. Actually, that third, that most important area is the one that we'll certainly be watching for. But what do I mean by that? Get to your point already, Steve-O. Well, let's take a look at the XAU. All right, I'm just going to come over and take a look at the XAU out here. And what we can see, certainly we see that gap to the downside, but when the XAU made its top out here, and all I'm sharing with you are patterns, right? Sometimes the patterns work, sometimes they fail. In this case here, back on August 12th, as the XAU was making its high, it was singing in that Stevie Wonder key of G. That seventh wave move to the upside. Price was moving higher, doing it with less relative energy out there. And price also was trading below Stevie's red line. That's that oscillator on change line, that squiggly line going across my screen. Now, where we are at today is today's low has formed a seventh wave move to the downside. Price is moving lower with less relative energy. Yes, from a volume perspective, the swing point was taken out with volume. But from a relative weakness, all right, you thought I was going to say relative strength, but we're headed lower. From a relative, you can either be relative or relative out there. But from a relative weakness standpoint, it does not have the energy as it's pushing down. So is this the bottom? Do you buy here? No, I don't think so. I think what you wait for is you wait for the cavalry to arrive, because this leg G, this seventh wave move to the downside, can extend with a lower low tomorrow. That would be Friday. And then a lower low on Monday and a lower low on Tuesday. And at some point in time, if you keep pushing lower, that relative weakness divergent pattern could go away. It goes away. That becomes a problem for the miners. Now we're taking a look at the XAU. It's the same setup inside of the GDX out there. So whichever we take a look at, you're looking for the cavalry to arrive. And if you're a really aggressive trader, you'd start taking a look at some short-term charts to try to make that determination. But the same pattern that called the top out there, probably when nobody thought there was a top in the XAU, is now in place as the XAU is moving lower. Guess what else is singing in the key of G? It is Goldilocks. Yes, folks. Goldilocks also pushing lower with less relative energy. Steve Rhodes will be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's just finish off the minor area here and tell you what else it is that I'm looking at. So this is the chart for the GDX. Now, one of the first things that you and I can do as far as a technical tool, we certainly can use Fibonacci retracements out here, which means in this case here, going from the low to the high, which is a weekly chart, by the way, that we're looking at. And clearly, what the GDX has done thus far, it's sliced right through the 0.618 retracement level of 1981. Now, closing back above 1981 tomorrow would send a strong message. Of course, I don't know what the candlestick is that would form tomorrow, so we'd have to take a look at it then. But one of the reasons why I say that now, this also means that 1655 would be a natural place to look for the next buy. However, and write 1981 on your pad of paper in case it closes back above that. Not today, but on tomorrow, on Friday. But here's what I'm looking at. It may have really what we have seen out here. And it's not really a swing point. It's not a swing point, period. But the week that began February 8th, 2016, what the GDX had on a weekly basis was 583 million shares to the upside. In fact, a nice sign of strength out there. And today's low thus far has been 2052. As long as price does not close inside, did I say 2052? What the Sam heck was I drinking there? How about 1868? That's more like it. 1868 compared to the high of 1885. We're traded in 1908. So this is coming into a sign of strength and doing it with much lighter volume. 340 million shares today. Like even if you do another 150 million, 340, 440, 490, you're going to be well short. You're going to be 100 million shares short. I don't think that's the volume that's going to be done inside the GDX, but anything can happen out here. So price may have – so we know price is moving lower, doing less relative energy. We know that it's coming into an area, a value area, where, testing a sign of strength with lighter volume. Of course, the whole key is going to be what in the Sam heck is Goldilocks going to do. And in the case of gold, as we mentioned earlier, it too is singing in that key of G out here. Now, look, no doubt the U.S. dollar index is long and strong out there. And we do know there are periods of time where the U.S. dollar index goes up, and so too does gold. Doesn't usually last for a long period of time, but it's not like days. Okay, it's more like months when that correlation can move in that same direction. So instead, I'm suggesting let's just focus in on this chart here and its patterns. And just simply use proper risk reward out here. So what are we looking for? Well, yes, one of those things, as Danny in Atlanta points out, we're looking at the yen out there just because of its correlation too. But the number inside of gold, the current gold contract that you would be looking for, and today is the first day in about 5 or 6 days where price is now below Stevie's red line. Now, that's not a good thing, because you have a falling price oscillator. That's the bottom panel of my screen, and it's below zero. It doesn't get much more bearish than that. But we do have a bottoming signal out here that we want to be paying attention to. We're not going to be ignorant of this two really bottoming signals out here. We're waiting for number 3, which is some type of reversal candle. And as really Danny points out, what we're also looking at is what's going on inside of the Japanese yen. I didn't mean to hit the wrong. I guess I got the continuous contract out here. And in its case, clear downtrend. You can almost see just this little red diagonal line that's out here. And it's below Stevie's red line, 85.82 out there. So there's not anything that looks very promising inside of the Japanese yen. However, let's go take a look at the 30-minute chart, see if we can figure out what it's doing out here. In fact, I don't know if this will do it or not. Son of a gun. Well, let me see here. If I refresh all my historical data, what will pop up on the screen out here? I don't know why the gold contract on the bottom hasn't updated, but, it simply hasn't. Here, when we take a look at the Japanese yen, come on, populate for us. We're on live radio, live TV out here. With regard to Goldilocks at the bottom, you can see on a short-term basis, 30-minute chart, prices also move lower. Wave number 6 out here, move lower, less relative energy. So short-term, you're seeing a nice viable short-term bottom out here. Price above Stevie's oscillator on change line. If it can actually clear its 30-minute TAS market profile high, which is 1131.70 is what it looks like to me. Getting above that would say, okay, maybe game on. Maybe a change in trend is about to take place. The Japanese yen, Danny, same 30-minute chart out here. Price is starting to trade above that oscillator on change line. So, and price is now also, is also trading above its TAS market profile out here. So there's potential in these patterns out here, just intraday. What you really need to see on all of these intraday patterns is a retracement that doesn't take out the low, just some type of retracement, 382618, and then goes ahead and makes its next leg to the upside. You need to see A to B equals CD patterns to the upside forming out there. But I'm just simply going to spend time with you and share with you these different patterns because you and I watch these repeat over and over and over again, and to ignore them is just something you and I are not going to add to our arsenal. So gold may be bottoming right here. The 30-year Treasury, absolutely. At this stage here, as long as it doesn't close below that hammer low, it has formed a bottom. The yen futures, or the yen versus the dollar, continues to weaken. Short term, maybe so out there. And so that really covers those marketplaces. Now, here, I've got an email. I love emails. I love when you guys you guys or gals take time to, actually write an email and make me smile. And this email here from Dave in California, let me make sure I got that right. Was that Dave? Yeah, it was Dave in California. Did make me smile. Now, Dave in California, he wants to take a look at Ford Motor Company. So let's go take a look at the big F out there. And it's trading right now at 1263. And Dave's question is where we at as far as where we at inside of Ford. He's looking at this in his retirement fund, his IRA account out here. So let's try to help Dave out with regard to what Ford is doing. So we can clearly see a nice downtrend that this has been in, Dave, just simply coming back to July 21st, 2014 out here. So that's one thing that we know. Let's also take a look at some market profiles. These are going to be hidden. We're not going to hide them anymore. These are like hidden levels of support and resistance. These will help us to identify potential places to maybe buy in equity, to where to look for support, and whether there's been a potential change in trend. And voila. First, let me turn off the price level. Hopefully, Dave, you're watching us on Tiger TV. But here's one of the things that we know. Today, and I do mean today, what Ford Motor Corporation has done. The stock chart itself has formed a brand new TAS daily profile. Now, this hidden level of support or resistance is suggests a change in trend because that profile has occurred above a prior profile. The green line that we're looking at is a weekly profile. Those tops of those boxes should be resistance. When they fail, we like to say nothing more bullish than a failed bearish pattern. Now, what's positive for you, because you're looking at more longer term, I would think, is that we have last week, by the way, it's a weekly chart that we're taking a look at. I harken back here, which is fine. But let me try to get this together for Dave and take a look at Ford, which has closed above its weekly market profile last week, going into a bit of rough weather out here, the downdraft from July 25th. But we'll continue to look at Ford backwards.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're taking a look at Ford Motor Corporation for Dave, who's taking a look at wanting to add this position into his IRA. So since it's a long-term count, I'm going to try to keep this as simple as I can, because you can do these same things on your stock chart out here. So we took a look at market profiles. I'm going to go ahead and turn those off. And what we do know is that from a weekly perspective, we're above the weekly high, which is 1224. So that is intermediate term bullish is what we'll call it. Let me go ahead and turn those off. And the next thing, when I began taking taking a look at the Ford chart, I said, hey, take a look at this downtrend that it's in. So that's another clue here for Dave with regard to entering this trade. And if we come all the way back here, back to July of 2014, we can clearly draw a trend line. Now, in this case here, it's a green arrow to the downside. So, Dave, what I would suggest to you is, especially since Ford is trading relatively close to that trend line, I would draw a trend line on your chart, and I would wait to see if Ford could go ahead and take that out. So that would be one place where you could enter a trade in Ford. Let it take it out. It'd be a momentum move out there. If you want to buy a retracement, or if you want to begin a position out here, remember the trend has not been broken. The trend is your friend until it isn't. In this case here, the trend is really not your friend because Ford continues to trade to the downside. Now, with regard to what it's done on a daily basis out here, is it has completed that first A to B equals CD pattern. You might say, what the heck is that? That's when we take a swing point. In this case here, it's the one from November 9th. That becomes what we refer to as A. Price moves up before it makes another change in trend out here, moves up into a high on November 14th. Then we see a certain change in trend. We see price go ahead and pull back out here, makes its next swing point. That's where the lowest low takes place. November 18th, it was 1173. 1173 as well. November 22nd, we'll go ahead and choose that. And what we can see is the 1-to-1 A to B. So that A to B leg is our first measurement tool. We add that to where that C level occurs. Where the stock market does 75% of the work for us. That projection was 1316. Look, what it actually hit on the trading session of December the 7th as far as the high was 1315. 1315 on the 8th. Got just slightly above it on the 9th out there, and then backed off with a bearish reversal signal. So we may be forming another A to B equals CD to the upside. Well, here's one thing we know on this daily chart with regard to Ford. It's trading with inside its last sign of strength. That last sign of strength took place on the trading session here of December the 1st. As long as Ford is trading below the price level of 1280, then what I would say, if you want to really build a position out here and you're not too worried about that trend line that we just looked at, then wait for Ford to get down to 1218 and buy that retracement and come back into that area and do it with less than 95 million shares on the pullback. That is where you could see the next A to B equals CD to the upside. So either buy it on a momentum of breaking the trend line out there, or because you've been looking at this, I would guess you've been looking at this for a while, buy it on a retracement in that 1218 area. And what you don't want to see is you do not want to see Ford get below 1173 out here. That is the swing point that we use from November 22nd. So thanks as a new listener. So thanks for listening in. We appreciate it very, very much. Let's go take a look at a couple other equities here. Bill would tell you I'd like to take a look at UNG. Of course, you know what that means. That means we really need to take a look at the natural gas contract. But let's first take a look at UNG. And here is what we know about it. Let's get rid of this. We know it made a 100% move of a move. You might say, what in the heck is that? Well, in the case of the UNG, United States Natural Gas ETF fund out here, made a high back on October 13th in the 960-ish type level, makes a moose. I'm going to get down to lower lows back on November 9th, gets down into the 6-ish, 7-ish type area out there. Then decides to V for victory out here, make its way all the way back up to the highs. When it made its way all the way back up to the highs out here into the December 9th time frame, that's what we refer to as a 100% move. Gets back up into the prior swing point. Now it is backing off. What does that mean? Of course, this is really going to track natural gas. But if we were just going to stay on this chart here and I was going to provide information to Bill, I would say, well, Bill, here's what we know. Today, we're seeing UNG trade below its TAS market profile low on a daily time frame, which is 871. If you close it below 871, this says your next buy would really be one of the weekly levels out here, either 802 or 838. That's what you would be looking at. However, it would be inappropriate for us to make our decision based on that. And instead, what we need to really do is go take a look at the natural gas contract out here. So we're taking a look at the January. No, we're not looking at January. G is February. We're looking at the February contract out here. Whereas in the case of UNG, it came back and tested and was trading below its TAS daily profile. Today, this is just merely a test of that level. It's been a test and a rejection. That's the price point of 345 out here. So, this could be it. If we see price close below 345, then you're going to wait to enter UNG until we see price come all the way back inside of the current contract here till the $3.13 level. Now, the problem here, and this would say don't enter today, just looking at this daily chart. Let's go ahead and get rid of those retracements. I don't really need that in there. Let's get rid of the market profiles. We've already covered that. And what the natural gas contract did today, that's not necessarily a good scene, is we know that there was a breakdown. We know that there was a gap to the downside on December 12th. Now, remember, those gaps are our friends. That is where price is either breaking out or breaking down. In this case here, it was a nervous breakdown. And so that says that today was a test of that breakdown area, that resistance zone number 1 is what we'll call it, at $3.60. So it's already tried to make it to the upside, couldn't get past that resistance point. And that suggests that, you know what, it probably wants lower price. So I hope that helps you out with regard to UNG. Pay attention to the futures contract that is contained with inside that United States gas fund ETF out there. And then we've got a question about Apple. Let's go take a look at Apple, see how far this is falling from the tree out here. Now you got Apple that is also trading right into a breakdown area out here. That breakdown area being, voila, right here, the trading session of what was it? The October 26th, 66 million shares to the downside, and today you're up with 32 million shares. Not too bad on the scheme of volume. Yesterday it was 34 million shares. So today you've got Apple moving higher with volume. Now, where is Apple headed to? Well, it's going to at least get back down to where it had broken out, right? It's inside that gap right now. That says that its next area to tag is going to be 117.31. And if it closes above that, that says that it's going to go tag the high out here at 118.69 from the trading session of October 11th. 64 million shares out there. Let's turn on our market profiles, see if there's any information here that we can glean from it. And we can. Prices above the weekly, prices above the daily. And so for those of you that think the NDX isn't going higher, you got to say why. Apple is. Apple is going to make its way and test that 118.69 level. Now, the volume on that swing point, if I didn't give it to you, and the bottom of that swing point, by the way, is 116.20. We're trading at, how does that work? 116.20 right now. Again, 64 million shares. So you're kind of coming into lightish volume. But any close above 116.20 says you're going to go test the high, 118.69. And what's the NDX going to do? Or the QQQ going to do? Head to higher prices. Steve with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Cards and letters, any other emails at this stage. So let's go take a look at the yield curve out here. This is a chart that I shared inside the Tiger's Den earlier. And you've got the financial sector, the XLF, up at the top portion of the screen. And then down below, what we've got is, in essence, the yield spread between Fed fund rates and the 5, 10, and 30-year rates. Those are in the 3 panels down below. We can see we've got nice, huge moves to the upside out here. Nice, huge trend lines out here, right? And not even trend line, just simply huge moves. If we just take a look at this green arrow out here, and what you'll notice with regard to the XLF or the financials is that, look, when you have a rising spread, which is what we have right now, even courtesy of yesterday's action by Janet Yellen. What that is good for is that's putting the emphasis inside of the XLF. So you can see that it, too, is moving higher. And as long as this continues, the XLF is going to have plenty of energy. In fact, it probably will become the best performing sector for years to come. Inside of the market. We know that it's been held back with regard to where it's trading in relation to the highs in 2000 out here, the XLF here. If you take a look at the top portion of our screen out here, that was a trading somewhere in the high 30s. The $30 area, maybe it was 31, somewhere in that range. And right now you're only trading at 23.76. So the XLF, this too is going to go ahead and make its way up to the highs out here. We have a caller on the line, and I didn't notice that. Is Patricia from Orlando on the line?
Yes. Hi, Steve. How are you?
I am good. I'm sorry if you were on the line for a while and I didn't see it, but I'll make it up to you.
Oh, that's okay. Thank you. I just wanted to get your opinion on Arcadia Pharmaceutical. I've been in and out of the stock. It's ACAD.
Okay.
I got in at about 6. I've been in it, and I've been out of it, and now I'm back in it. And I just wondered if you could give me some insight.
Yeah, absolutely. So, and the way that you trade this, just to so that I can also help you there, because you say you're in and you're out. The way that you are trading this is how? Is this shorter term? What gets you in? What gets you out?
Oh, well, I got into it just because I thought it was a growth stock when I first learned of it. And then what I did was I basically got out of it at, I don't know, it might have been like 16, or I think I got out of it at 12, and then I rebought it again. And now, like I said, I've been holding it for a period of time through the ups and downs. But I don't know, the pharmaceuticals, it's been good to me, so I could take a profit from it. But it's been down now a little bit, and I don't know with the changes coming whether I should stay with it. It's gotten some good, publicity about some of its testing, but I just, I don't know. It doesn't look like it's going to get back up in the 40s where it was, or high 30s at one point.
Okay, so let's take a look at what this has done as it's been moving lower. And one of the things that you and I like to look for as something is going to bottom is that it comes back to an area where it broke out. So we're looking for a sign of strength. And in the case of Acadia Pharmaceuticals, folks, the ticker symbol is ACAD. The last time that this had a breakout on the time frame that we're looking at on my screen was back on March 24th. And on March 24th, this went from a low of 1932, where it gapped up the next day, and it opened at 24.48. Now, the volume on that move that day was 14 million shares. The next day had even more follow-through to the upside, 18 million shares. And this is a beautiful example. So thank you for pointing this out to our viewers out here, because this was a beautiful example of something coming back to a breakout area and doing it with lighter volume, where one would want to go ahead and take a look at entering in a trade. Because on November the 3rd, this came right back to where it had broken out, but yet it was on 2.9 million shares versus the breakout volume of 14 million shares. To a certain extent, Patricia, it doesn't get much better than that. Now, what this has also done here recently is a few days later on the trading session of November 8th, this had another nice sign of strength. Not nearly as good as the one back in April or March, but it did have a nice one here, November 8th, with 8.5 million shares to the upside. Price came back yesterday and the day before to test that breakout area. And if we measure that volume, again, we're going to use our benchmark here, the breakout volume of 8.5 million shares, pulling back with 1.5, pulling back yesterday with 1.6. So this has come back to another, in essence, sign of strength to suggest to you that as long as this area holds, and the area I'm referring to is now 2104 to this 25 area. I don't know if that point spread concerns you or not, but that, in essence, is really where the sign of strength is inside of Acadia Pharmaceuticals. And therefore, I would stay with the position to see how this plays out. Now, with regard to how this plays out and what you're looking for, any questions there so far?
No. I guess one of my questions would be, though, would you buy more now at this point then?
It would the way that I would answer that question is I would want to understand what my risk is inside of in my portfolio. So, and what I mean by that is I would be taking a look at what my total portfolio size is. I would take 1% of that. And then I would determine what is the stop. What is the actual stop I want to use? Whether it's a hard stop or whether it's a mental stop, where is it that I would go ahead and exit? Because in this case here, you have come in, you have gone out. So where is it that you would actually pull the trigger to enter that stop? If it's, for example, a $4 stop, a $5 stop, I would take that 1% level. So let's just say it's $100,000 as an example for the portfolio. 1% of $100,000 is going to be $1,000. I would then take that $1,000, divide it by my stop size. Let's just make it 5, and that would say I could afford 1,000 divided by 5, which is what, 200 shares.
Yes.
So if I had less than 200 shares, then the answer is yes, I would add to it. If I had more than 200 shares and I was going to use that $5 as an example as a stop, then my answer is no, I wouldn't add to it. That's how I would be looking for something else to add to the portfolio.
Okay, that's very helpful.
Yeah, so I'd look. It's really about position sizing, because look, no matter what you or I do, whatever it is that gets us into a trade, whether it's a technical analysis tool such as price coming back to a breakout area, whether it's some other level of support, whether it's some news event, whatever it might be, no matter what tool we use, traders and investors can do something different. Doesn't mean the stock's going to go up, doesn't mean it's going to go down, and so forth. So the most important thing we can do is to position size properly so that we haven't over-leveraged or over-risked, so that if the trade goes against us, it doesn't hurt our portfolio so much that we are out of the game, so to speak.
No, that's an excellent way of approaching it. So that really will be very helpful for me in making a decision.
Okay, good. So the last piece of information maybe that I can give to you, if I'm going to look for the next areas of resistance on a move up that you're going to want to watch for, is probably this thing getting back above 2704. And if it gets back above 2704, what this ought to do, based on the fact that this pulled back into a breakout area, this ought to make an A to B equals CD to the upside, with yesterday being the low and 33.86. 36.46 becoming the next target. All right, Patricia?
Great. Thank you so much, Steve.
You bet. Thanks so much for holding. Patricia in Orlando, Acadia Pharmaceuticals. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Earlier in the den, Duffy and I were talking about the semiconductor index. That is the bottom portion of the panel of my screen that we're taking a look at. And I had also mentioned the financial sector. Well, I had mentioned it earlier, I think, during the show. And my contention was, because there are many out there that believe the market is going to form some type of significant top. I am not in that camp, not whatsoever. I believe we're going to higher highs. I believe the market is going to be trading much higher than where we're at right now come the July timeframe of next year. The Dow 20,000, that's nothing. I mean, that's nothing to where the Dow was going to eventually head to. And really, the statement that I made was, look, the market, if we saw some significant divergent signals out here, then that would be a different story. And those being inside of the semiconductor and the financial sector. So we looked at the financials, right? And so we see that nice little spread that it has going. So they're going to head to the moon here for a while. Semis are at all-time highs out here, the bottom portion of my chart. Of course, we're looking at a line chart, so that means we're looking at the close of the session. Back in 2007, we saw the type of divergence that you would like to see associated with major top. It's not the only one, but it is one that you certainly would like to look at. Remember, the S&P 500 made a high back in July of 2007, but the ultimate high or higher high took place in October of 2007. Now, what took place prior to that October high was that you started to see a diverging pattern. You started to see lower highs inside of the financial sector. And inside of the semiconductor index, you also began seeing lower highs out there. Now, at the bottom, back in March of 2009, the financial sector, which was in a total wreck, it's basically been in a wreck, although it's certainly off of that bottom, not anything like the S&P 500 or the other sectors within inside the S&P 500. But certainly back in March of 2009, prior to March of 2009, you had the semis forming the bottom back in November of 2008. And then we saw higher bottoms form out here. So fast forward to where are we today? We have no divergence whatsoever. The S&P 500 making higher highs. The XLF making higher highs and going to continue to do so. And the semiconductor index making higher highs. Look, do all these patterns always pan out this way? No, I wish that they did. But you and I were just simply not going to ignore these patterns that are providing us with good clues as to what the market wants to be able to do out there. So, Duff, that's more of my take and the reasons why, I believe. Well, one of the reasons why I believe, because I believe we're in the last phase. We're in the fifth phase of the Elliott wave out there. And if we take a look at what that is, just as a minimum projection as to where these markets are headed to. I'm not dealing. Look, and by the way, look, I've seen a bit of a sell-off here in the last half hour. No big deal out there, okay? I mean, we'll look at the daily charts real quickly, but here to give you the price targets, initial price targets. Wave number 5 inside the wave inside the S&P 500, 24.97, give or take a few shekels out there, 21,747. So forget about Dow. Look, were they going to be talking about Dow 21,000? You're going to say, hey, Steve-O said 21,747 is going to fly like a big jumbo jet up to that level. 5804 inside the composite. Russell 2000, 1473. Don't forget, Russell 2000, largest weighting inside of it is the financial sector. So it's probably going to blow out that 1473 level out there. And with regard to today's action out here, look, I'll just put the ES Mini as an example out here. Here is the daily chart. In order for the ES Mini to get me to say, oh, you know what? We've got a deeper retracement going on. I need to see it close below 22.45. 22.49 would be a start. We're at 22.54, but it's got to close below that oscillator unchanged line. You look inside the NQ out here, no big deal. The number that it's got to close below, it's got some work to do, 48.75. It can happen, but until it does, the message is long and strong. Take care, folks. Stay tuned. David White, Tom O'Brien, and Andy Heck will be up for the afternoon. We'll see you on Fantastic Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.